Hey, good morning, everyone. Welcome to our webinar on how I put together my first syndication and raised $1,016,250 in 30 days. Now, we have a jam-packed presentation, which we are going to jump into here in about 2 minutes. I know as these webinars kick off, we have a lot of people who are coming in, getting situated, getting off other calls. So we'll hang out for a minute, chit-chat, and dive into the details. And by the way, my name is Chris Lopez. And I got Troy Miller with iCore. Good morning, Troy.
Good morning, Chris.
How are you doing?
Doing well. Super excited about all that we're working on right now. Very optimistic about the market. So, yeah.
All right. I always like to know, we got quite a few people chiming in here. Let me know. My two questions are, where are you at? Like, what market you're in? I think most people will be here in Colorado, but I always like to see where the market is. And I'm also curious out there for people's levels of experience on what they've done in terms of like putting together syndication. So any type of deal that's bigger than you buying a deal yourself, a partner, a bigger deal, raising money. Drop in the chat box if you would, please. And let me know what your experience is. And that helps me know the chat's working as well. All right, see some Denvers. No surprise there. All right, so Denver. All right, Highlands Ranch, so Denver. All right. Ooh, got some Florida people. Awesome.
Florida, wow.
Yeah. Well, we got snow, we got sunshine, hopefully. All right. Well, hey, I appreciate everyone chiming in there and telling us where you're from, your experience level, and keep those coming in. It's very helpful. All right. So let's jump into the details here. So this presentation is titled How I Put Together My First Syndication and Raised $1,016,250 in 30 days. Now, this is a joint webinar with Property Llama and iCore, which is the investment community of the Rockies. And so my name is Chris Lopez. I'm the founder of Property Llama and also an investor here in Denver and Colorado. And I got Troy Miller with iCore. Hey, Troy, how's it going?
Good morning, Chris.
Yeah, so I know we got some people on here who don't know who or what iCore is. Give us a quick rundown if you don't mind.
I think everybody's pretty familiar with a RIA or Real Estate Investors Association, but iCore is Colorado's Real Estate Investors Association. We have been in operation since 2008. A couple of investors started the organization up in Fort Collins. We've expanded all the way down the Front Range to Denver and to Colorado Springs and Pueblo. We've been there to serve the investor who maybe is the lone cowboy or cowgirl out there on the range, just to pull all the resources together so that nobody has to recreate the wheel.
Yeah. And I've worked with iCore for years. I got plugged in when I first got started in real estate investing. Great organization. Helped me, helped all my clients, helped other people around town. And as I've been pivoting my business, iCore has been pivoting as well, which is why we're doing this really cool joint webinar. All right, so this is going to be about raising money and putting together syndications, which is really key for this new market reality we're in, which is the new higher interest rate market. So we got three main agenda items we're going to cover today. The first one is, where's the BFT, or where's your BFT? The second is I'm going to do a dive into the Samuel Drive syndication case study, which is the one I raised the $1 million and change for. And then 3 is going to the high level of how I raised the money and focusing on small landlords and how anyone can do that, whether you're here in Denver or any state in the United States. All right, so my name is Chris Lopez. A lot of you guys know me from the Denver Real Estate Investing podcast over the years. Know me through Envision Advisors of helping people buy and sell rentals. And then over the last couple of years, I've gotten a lot more focused on doing longer-term portfolio planning with our software, Property Llama, which has led us into doing some of these bigger deals with syndications and the stuff that we're doing with iCore now. And one of the great benefits I've had from talking about these more advanced topics is they've really resonated, obviously, with me, my clients, but also I've had the privilege of working with bigger pockets and being on their podcast, their YouTube, speaking at their seminars and everything to come actually share the message on how to scale up your business and take it on the national stage. So the stuff we're talking about here applies all across the country, but we're going to weave in some Colorado details as well. Now, we're not going to be talking about specifics on investments, but since I am showing you a deal I have raised money for and is active right now, I do have to give you this disclaimer as my lawyer told me I need to share. So obviously, everything we say here is information that we have gathered. Go out there and always do your own due diligence. But let's get on to the important stuff. So where is the BFT? And I see some questions on there saying, what is the BFT? The BFT is the big effing trend. So why do I emphasize that? Because the big effing trend is what matters so much. I think in life, in business, and investing, if you just focus on the big freaking trend, so many other details take care of themselves. All right, so I will talk about the BFT. We'll do it BFT for short. And really put in some context here for what has happened in the Denver market and some of the markets around the country. So this is a chart here for about the last 50 years. That dotted line on the bottom is condos. The solid line are single-family homes. So this shows you the price appreciation. So it shows you how much prices have appreciated, just Denver market or Denver metro market wide. Now, I highlighted the crash here, back in the 2006, 7, 8 era. And, a couple of things stands out is the first one is it's just so small now after this huge growth wave. We've had all this massive appreciation and rent growth. Now, I wasn't in Denver during this crash, but I was starting to get into real estate back then. And I mean, man, the world felt like it was ending. And it looks like, right now, this looks like, just a pretty small slope. Back then, it felt like we were doing a Thelma and Louise and it was like driving off a cliff was, what it felt like. But it's really good perspective because what has happened in the past will repeat itself. But then look at the big effing trend after this where it crashed and we had this huge trend going up. And for all the people that rode this trend out there, they had the massive appreciation and rent growth. Now, while a lot of us are smart investors, a lot of us just rode this trend as well and had the big gift of that. So keep that in mind that I think the most important thing in the world is the big trend. And I say this because what got me focused on this concept was in 2002 timeframe, I read Rich Dad Poor Dad, which is, I think, a classic and a book that really set me on my entrepreneurial and investing journey. But at the time, while I wanted to get into real estate like Rich Dad Poor Dad said, I had no money. The internet was not what it was today. And I lived in Nowheresville, Virginia, but I got into internet marketing. And I rode the really big trend there. I got into internet marketing in 2002, 2003 timeframe. This was like Yahoo was still bigger than Google days. And then obviously huge, massive growth. But what this taught me is that the trend is your friend. And while I was brand new to business, and made so many mistakes along the way, I still built a couple successful businesses, achieved some great income, and learned a lot of great skills. And aside from all the hard work, the hustle, all the grind, all the stuff we have to do, I just was also blessed with riding a big trend, which helped make up for so many issues along the way. So I took that concept of ride the trend. I said, as I go into investing, as I go into business, I have to focus that trend. If I can just identify that big trend and ride it, it takes care of so many small details. So I got into real estate investing in about 2011 when I bought my first ever property. Right here, not kind of during the crash, but during the early recovery of it. And I got serious around the 2014 timeframe. Well, we all know what happened in Denver and the Front Range was that massive growth. Well, by focusing on that trend as an investor, I was able to turn about $100,000-ish into well over $1 million portfolio for me as an investor, which, hey, that helped me become a real estate millionaire, which was a huge goal of mine. And then at the same time, since I know a lot of you on here are investors, but also entrepreneurs like you and I are, Troy, I also was able to focus on building a business that turned into a multi-million-dollar business as well by launching and growing the Envision Advisors, which was a brokerage I built, which helped other people go out there and buy and sell long-term rentals in Colorado. So, built a great team. We did hundreds of transactions, hundreds of millions of dollars a year in sales volume. And a big part was, hey, we identified this trend. We knew it was working in the market as an investor. And I built a business around the trend and what investors needed to do. So why am I sharing this history with you? Well, because what I did is something that anyone else can go out there and repeat. And it's my recipe for success. Like, I used to try to fight the trend. Now I just say, hey, where's the trend going? And I hop on the trend and I ride it. So this brings us now today on where's the BFT? Where's the big freaking trend now? So in today's market, is it like it used to be, Troy?
Hardly.
No, the easy days, right? The easy or good old days, whatever you want to say it, they're over. And they're not in the residential real estate like they were. We could ride this huge wave. I thought back here was going to end a little bit sooner than we had the couple unicorn years from amazingly low interest rates. But now the appreciation party is over. Prices aren't crashing. Prices flattened out, and now we're seeing modest to slightly below average growth. We've seen rents flatten. We've seen taxes go up. We've seen insurance go up. And so a lot of that big trend where we had so much stuff going for us, it's changed now. But my point there is that BFT, that's over. Not saying there's no opportunities on there, but that big obvious trend, that's no longer there. So where is the BFT? It's in commercial properties. That same thing that gave us a spike in unicorn years here for residential real estate is the same thing that created some opportunity and also some pain in commercial properties. When I say commercial properties, I mean apartment buildings, development deals, office building, mobile home parks, just anything that's not a 1 to 4 unit residential property is how I'm kind of lumping that in there. As I go through all this, I know I speak fast. I go through a lot of details. Type in questions on here. I love getting questions from the audience to make sure that you guys are up to speed with us. But I want to highlight here or use the example of Denver apartment buildings to show where the opportunity is. So this is like the graph we've been talking about where it showed residential properties, but now we're looking at multifamily units. So this green line, this bright green line is 2 to 4 units. So duplexes, triplexes, and fourplexes. This dashed line on the bottom is commercial multifamily or anything that's 5 units or more. So you look at the green line here, and you can see here, prices went down some in the 2007 crash, but not quite like what they did in the residential. The commercial prices were a lot less. They stayed more flat. But look what happened here. The duplexes, triplexes, fourplexes, we saw big growth, and then interest rates went down, prices went up, and we saw those prices drop a little bit. In terms of duplexes, triplexes, fourplexes, they dropped a little bit, and now they're kind of same thing like residential. They're being flat to like modest appreciation. So some opportunities there, but not any giant trends. Like this isn't a huge distressed trend line here. Now let's look at the commercial multifamily or the 5 units above. So that's the dashed unit on here. You can look, it's going up, up, up. And then in 2020, what happened? It was COVID and low interest rates. And then those prices shot up when interest rates were in that ZIRP era of zero interest rate environment. And then what happened here right in 2022? Interest rates started going up and we saw prices go down. Now, look at how much they dropped. Right now, this data is like the end of 2023. And you can see prices are back at like 2020 prices. And actually, we've gotten deals back at like 2019, 2018 prices. Why? Well, this is the trend. This is the crash. I know a lot of people out there say, man, if 2008 happened again, I would do things differently. I have said that. So I've been waiting for this. Now, this is where the next BFT, the next big freaking trend is at. So I want to highlight like how important in my mind this trend is to my business and how important it is for anyone's business out there, whether you're an entrepreneur or you're an investor or you're like Troy and me, where we wear both hats. And that's why I know a lot of the people on the webinar, you guys wear both of those hats. So because of that change of the market, I've made two massive pivots from what made me a real estate multimillionaire. I did all the stuff in investing and I built that Envision Advisors business. I am selling most of my Denver rentals to invest in these bigger commercial deals now. I sold two, actually 2 weeks ago on March 6th. I sold two more of my properties so I can invest in these bigger deals. And then at the end of 2023, I actually shut down the Envision Advisors team to put 100% of my focus into putting together these bigger deals. And I'm doing it now through Property Llama. So same concept, but a different company, different vehicle for putting these deals together. Why? Because of the big freaking trend. And I also know because of this, Troy, like we've talked about the big freaking trend, iCore's making pivots as well. I mean, you've changed how you're delivering value, how you're delivering communication, how you're creating community with investors. Like, you guys have to realize that, hey, when trends change, you either adapt or die. I've adapted, Troy and iCore have adapted, and the whole point of this webinar and everything we're talking about, and a lot of the direction iCore is going in, is tell people to adapt in the new market. So, something else I want to throw into here as we're talking about investing and looking for opportunities is the age-old investing adage of buy low and sell high, but then once you sell high, you want to buy low again, right? So on the left side here of the screen, this is just a national chart of showing how much equity people have in their single-family homes. So that first chart we showed you of all that price appreciation, you can see we just have giant equity growth here. And that red line is the debt. And so obviously the bigger between the value and the debt, the more equity you have. So we have record amounts of equity on here. So what I am doing, and many other investors out there, they're selling high, they're selling their single family home equity or putting HELOCs on there and pulling equity out, and they're buying low over here to commercial assets. So that's what I'm following, and that is as the real estate market has changed. This is one of the smaller trends going on that you want to focus on as an investor and also as an entrepreneur as we talk about putting together these bigger deals and different types of deal structures. So, because what's going to happen here? I mean, Troy, you were in real estate back in 2008. I mean, things were dropping and, oh my gosh, you're in real estate. You're crazy. What are you doing, right? Worst decision in the world to be involved in real estate when prices dropping, right?
I feel like there's an expression that we used to say in the office is the mountain is often clearer from afar than it is up close. And I know there was a lot of doom and gloom during that time period. But looking back, it was like looking at that chart earlier. It was like that was just a blip on the radar.
Yep.
It was like if you're playing the long game, it's there for you.
Exactly. And it's going to follow. Like, I mean, prices drop. And does anyone think like these apartment buildings, some of these deals, are they going to go to zero? No. Some office buildings may get really close to zero, but we're not talking about doing those deals because that's a trend. I don't know what to touch, but the other ones, yes. Prices will start going up there. And there's my amazing red line graph to show prices will go up. So what do you want to do? You want to buy low and then sell high as it goes up. All right. So now that you got the context of how I look at things and how I've seen a lot of my very successful and very high net worth mentors look at things, how did I get started? And we can talk about how you can get started in taking advantage of this new market shift as well. Because all this has been going on for the last year or so, it is still like inning 2, to use some baseball terminology. It is still early innings in the game to go out there and put together deals and get your business pivoted to doing this. So the reality is doing these like bigger commercial deals or these apartment deals, it takes a lot of time and they are intimidating. Hey, buying a 50-unit apartment building is a lot scarier and harder than going out there and buying a single-family home to flip or burr and turn into a rental. So the way I surmise this is that these deals are about impossible to do as a solo operator. I mean, there are so many people out there, you know them from iCore. I know them. where they became real estate multimillionaires by buying a single family home and flipping, or buying a home and doing the BRRRR strategy of the buy, rehab, rent, refinance, and repeat. I bet you a lot of the people in the webinar did that. If you've ever done a flip or BRRRR, put in the chat box, because you know what I'm talking about, and you know that you can do those deals on your own and basically quarterback everything yourself. But with these bigger deals, which are really called real estate syndications, you can't do it on your own. So a real estate syndication is really just a very fancy word for a partnership. And a syndication really means a partnership between several investors to take down and to operate a real estate project, whether you're doing a multifamily value add, or you're doing a mobile home park or a self-storage park. I mean, these are syndications where there's varying levels of partners, and it's lumped into syndications. So partnership, syndication, just kind of use those words interchangeably right now, because that gets you in the right direction of where the new market is going, that it's going to take partnerships or syndications to really focus on doing deals in this new market, whether you're doing big deals or you're staying focused on small deals. We will talk about both in the webinar today. So something else I want to talk about before getting the details is really some of the mindset we have on here, because this is so important to going out there and having success again in business and life and investing, is that mindset shift. How can I do this? And I had my bouts where I'd say, hey, I can't do that, but that is a bad word to say. So one of the biggest takeaways I got from Rich Dad Poor Dad, if you guys have read the book, Rich Dad Poor Dad, it's light on details, but it's really good on concepts. So one of the things I remember Kiyosaki, the author, saying was, don't say I can't, say how can I? And so part of what I started doing when I read the book about 20 years ago now is I've been very cognizant of reprogramming myself to not say can't, but okay, if I start saying can't, say no, how can I do it? Because if someone else has done it, guess what? That means I can do it as well. And so to emphasize this, like, I have 3 little girls at home, 6, 4, and a newborn. And it's been fun being a parent, but can't is a 4-letter word in my household. If they say can't, I'm like, no, don't say that. How can you? It's hard. How can we solve the solution? Who can you ask for help? Who can you go talk to? Go ask mommy, go ask daddy. So I want to emphasize this. While it's very intimidating and it seems like you're staring at the proverbial mountain that Troy talked about, don't use the words can't, even if the wall seems unscalable. Say, hey, how can I do it? Because other people are doing it. So that means you can do it as well. All right. So getting into doing these deals, I'm a big believer in that you have to learn before you earn. So, hey, before you go out there and start making money, you have to go to college, essentially. Now, I'm not talking about going to a 4-year college, but the metaphor works well. Hey, go to college and I learn to go out there and earn a better salary, have a better career. The other thing I focus on is, aside from learning and knowledge, is my network. This is a classic saying, your network is equal to your net worth. One of the early personal development books I read on, who's the author of How to Win Friends and Family. One of the books he wrote talked about, if you take the average 6 people's net worth you spend the most time with, you take their average, that'll be your average of your net worth. So you want to hang around with people's net worth and lifestyle and values that you want to emulate, that you want to become. So as I started getting to these deals, because I was intimidated and I said can't sometimes, I had to reprogram myself, I learned and I networked. So I really started doing this in 2020 because I thought the market, interest rates started going up then, COVID happened, and then the market got extended a little bit longer. In 2020, I started seeing the world of syndications. I started seeing people put together these bigger deals. I was like, wow, this looks fascinating to me. So I did a couple of things. One is I'm always willing to, I'm using air quotes here, pay my tuition or invest my tuition. Now, I started investing my dollars as a limited partner or investor in these deals, meaning, hey, I'm not the one doing the deal, but I started investing to learn because I could then go learn from the person doing the deal. I could see how the money is working for them. I'd see their reporting. I'd come to their conference calls. I'd come to their meetings. I'd go walk the property with them. And I think investing in these deals in whatever form you can is the best way to learn. Even if you lose money once or twice, it's a very inexpensive tuition. So I will always invest my money to get my tuition before I go out there and ask other people to do it. The second is networking. So I'm always a big believer in networking and finding mentors. So I had the great opportunity to go out there and really start. I was networking with one of my friends right here, named is Terrence Doyle, and he was doing a lot of fix and flips in those easy days of the market. And then he started pivoting towards doing more multifamily, I think 2018, 2019 timeframe. And I started watching his business progress and him have success out there. So I started, learning more what he was doing. I invested in some of his deals to learn, hey, I know that building. I know that location. I know what you're doing. Let me invest a few dollars with you. And I was able to. And then he had the idea to go out there and start, learning from other people around the industry, other people who were just much farther ahead in the ball game than we were, where they had hundreds of millions of dollars of deals under their belt. And so I helped him go out there and do some podcasts, Bigger Pockets, called the Multifamily Mentor Show. And I got to meet so many successful people through there. So I'm learning, I'm investing, I'm networking, I'm walking some of Terrence's properties around Denver, and I'm just learning so much. And I'm a keep it simple, stupid type person, because I think the simpler you keep it, the more successful you are in life. And at least for me, that's how it's been for me. You can overcomplicate things, but I'm a simple person. And so I boiled it down to, wow, there's really two main types of people when it comes to doing these deals, whether the big deals or small deals, but there's two main types of people. The people who can connect capital, whether you write a check or you can go out there and bring 10 other investors to help pool their money to go out there and buy a building. And there's people who can run deals. Now, every person I've met, they are far better at one or the other. Now, some people can do both really, really well, like a Terrence Doyle, but those people are a rare breed. Most people are really good at one. And I'm a big believer, hey, take your strength and double down on it. So I always ask myself, hey, which side do I want to be on? And I ask yourself that question out there, is to go out there and which side would you be on? So I am great at connecting capital with deals. So I'm on the capital side. Now I can go out there and I know what a good deal looks like. I've helped people take down the good deals. I've bought good deals myself on the smaller side, but to go out there and take down a 50-unit, 100-unit apartment building or go build a brand new building, that's a full-on business that I don't have the experience on there, but I know a good deal and I know good people through networking, so I can connect capital to those deals. So I'm going to fast forward a bit here to the title of the headline, which is how I raised $1,016,250 in 30 days. Now, the project we're about to dive into needed $2 million in equity to take the property down. We took about $500,000 of it. Now, I raised that in 30 days. Now, I put the 30 days in there because it's a good headline, and it was about 30 days we raised the money on. But I also am very cognizant of these overnight successes. There is no overnight success. There is 4+ years of learning, investing, networking that allowed me to do my first deal in about 30 days. So I want to preface it with that because people are like, oh my gosh, you did that in 30 days. I can't do that. Right. Go put 4 years of hard work into it and then you can come out there and do it in 30 days. And so I spent 4 years of intently studying and doing this before I did my first deal. Why? Well, look at this. I'm going to fast forward to the end here. I won't go all the details of the spreadsheet here because we don't have the time to go line item by line item on here. But right down here in the bottom right is some variables on here for what we expect on the partner side for doing the deal to make. So I brought about half the capital, so I get a % of the upside on there. And over the 2 to 3 year hold, that should be worth to me on about between $90,000 and $185,000 in upside as the deal performs. Now, that is raising $1 million in 30 days to make $100,000 to $200,000. Hopefully, hey, that's great. Again, I spent years making that. So let's dive into the property here. Now, we're going to go into the Samuel Drive syndication case study, and this goes in the second part of our webinar on this agenda here, which is details on here. Now, one of my favorite things I do that I always try to do is I always want to, like I said, learn from a mentor. I always want to network with people. And when I find someone who's a mentor or somebody I can network with and they are more successful than I am, or they have a different skill set than I have, I try to turn them into a business partner, which is essentially what a syndication is. So I spent all that time with Terrence Dooley where I was networking with him and a lot of the stuff he was doing. He was also mentoring me in things. I invested in some of his deals. And when I got to a point in my career, my ability said, hey, I'm ready to do something. And I was able to turn Terrence into a business partner. This is another key strategy out there. Whether you don't do anything with me or iCore ever again, if you can have that mindset of turning a mentor into a business partner, this has repeatedly made me millions of dollars and been my repeatable blueprint for starting businesses and investing. So diving into the case study here. So there's going to be a lot of facts on here, and I'm going to give you the highlights. I'm happy to share the slide deck with someone, and we got some stuff coming up. We're going to go into a lot more details on how this breaks down. So Samuel Drive Apartments is about 15 minutes north of Denver, and it's 2 17-unit buildings. Great location. We're close to downtown, close to light rail, and it's a mixture of 1 bedrooms, 2 bedrooms. And it's the classic apartment building you see in Denver. Built in the 1970s, and most are 60s or 70s build. And what this one was, had vastly under market rents. There was room to raise rents about 40 to 60% between better property management, bring them to rent, and also upgrading the property. So to give the context here, we bought this property in October, November of 2022. So we did not buy it at the bottom of the market. The market is still going down, and I think it's still going down a little bit more before it comes up. So we bought it on the way down. I'm not a big believer in timing the market because I stink at timing the market. But again, I'm following the big trend. I know in a couple years, this property is going to be worth way more than we bought it for. Now, the plan for this is in multifamily, they call it doing a value add. In the residential world, that's basically the BRRRR strategy: buy, rehab, and rent. So the plan here was to buy this property and renovate the exterior, improve all the interior units, and it's going to take just under $1 million to go do these improvements. Now, this is a classic plan that many investors follow and invest in, and one that Terrence is great at. And we could raise the rents from about $815 blended on the building to about $1,300 to $1,400 is what the market rent is what we were pro-forming. Now, here's some before pictures. If anyone's walked an apartment building, this should look pretty familiar with you. Troy, how many of these units have you seen?
My mom was a property manager all of her career, so I've walked.
Oh, you've seen a lot then.
Properties.
Again, this is, it's just outdated. It's ugly, and it's not fitting with the trends nowadays. So took an ugly, units that were renovated 20 or 30 years ago. And now it looks like this. So here's some pictures of the inside where now it's all the new modern, new LVP planking, the right paint colors, new cabinets, the new faucets, and just updated everything. I mean, it looks so much better now. I mean, would you rather rent this or this? We all know. Updated the exterior, did a basic, some community upgrades of having a dog park now. I mean, how many people out there have tenants with dogs, and how many people have dogs themselves, right? It's like if you don't rent to tenants with dogs, you're cutting off like half the Denver market. Like people move to Denver to go to the mountains and hang out with their dogs. Someone put in here, did you put in a pickleball court? No, that is funny though. No, that was actually a dog park, but I think a pickleball court would be a good idea. That'd be a fun networking event, Troy. Should we do an iCore sponsored pickleball event?
I'll show up. That's all I can guarantee.
I mean, I've never played, but I'll come learn.
Right.
Well, there's an idea. So, talking more about the deal here, this property was purchased off market, and that's how a lot of these commercial properties trade, is they are not going to be out there on RE Colorado, which is our local MLS here in Denver, and a lot don't appear on LoopNet, which is essentially the commercial MLS as well. Now, remember, we were buying this property in the end of 2022, so rates were already going up. prices were already starting to get in that real soft space and starting to come down. And the seller had owned this for, I think they were like 20 to 30 years of a legacy. Or just owned it for a long, long time. And just based off of their life circumstances and where that they were looking to sell. And of course, they always want top dollar, but they own it for like, they bought this building 20 or 30 years ago. They already made so much money. They weren't worried about selling it at the top market because they were already making away so much money. And so we got a really good price on there. During the inspection of the under contract phase, we got some additional concessions on the inspection. So a really good deal there where, hey, even if prices kept going down, which they have, we felt confident in the business plan. Plus, about a half a mile away, there was another project that Terrence had done where in about, I think about a 2-year time frame, they achieved about a 77% internal rate of return. So they know the location, same business plan, same deal characteristics, and we had the prime way to do it. Now, I won't go on these details here, but I'll give you the highlights here because when you look at these bigger deals, it's a little bit more than just cash on cash return because we're talking, hey, we got to buy the property, we have to renovate it for a year, we have to stabilize, we have to get new tenants in there, new market rents. So it's a completely different deal structure. But the punchline was we were expecting about a 13 to 18% internal rate of return with upside. Now, if you don't know what internal rate of return is, don't worry about that. It kind of tells you by the end of the project, how much money we're making on an annual basis. These are essentially the same numbers we saw during that peak growth phase from 2012 to 2022 timeframe. And if you just bought a property, did some basic value add, did some basic stuff to raise your rents there, these were similar numbers we've been experiencing as residential real estate investors. So I want to give you that context on there. Now, here is a breakdown of what it takes in terms of to take down the building. So we needed about $2 million of equity. So this was money into the deal so we could basically do the down payment and also help fund some of the renovations and closing costs. So just like your typical deal you'd buy here, just with a few more zeros in there. So $2 million in equity, needed about $4.6 million in debt, and it was about a $6.6 million total takedown. And to go into more details on there, $5.3 million was the purchase price, or about $157,000 per unit. About $100,000 in closing cost. About $250,000 in working capital. So that's just money in the checking account to pay the bills and float things. And just earn that $1 million for the renovation. The exterior, the interior, the dog park. So about a $6.6 million total price is what we had on there. Now, in terms of debt, understand this is actually when we took down the property. You don't get a 30-year fixed through Fannie and Freddie on here like you do when you buy a property, but it's usually based off the Treasury, which was in the high fives at the time, and then 18 months of interest only, meaning, hey, we're not going to pay principal and interest, which is how a lot of the deals in residential structure, this is interest only for a bit. So it means a lower debt payment. Now, the plan was to hopefully sell this property within 36 months. Obviously, give or take some time with how wonky the market is, but hopefully within about 3 years, sell it for just under $8 million or for about $230,000 in total proceeds. Now, this slide here has the fees, the return structure, and the expenses. I don't have the time, nor do I want to put you to sleep on all the details on here. But hey, it's a different type. It takes a different amount. It's a different vehicle, a different way to go out there and run the deal. And the deals are structured differently for the people putting together the deal, the general partner, and also the limited partners, the investors on here. So if you guys want to get into a lot more details on here, this is actually, we're going to take a quick break and talk about this cool event that iCore is doing on April 25th called the Rainmaker Forum, where we're going to go into a lot more details on how to structure this stuff from the legal side, go into more details about how you structure it from the return side, the fee side, the expense side, how you go out there and also make money in the upside too for putting together the deal. So we're going to do a lot more deals on there. And Troy, let's spend a quick second here and talk about some of the pivots you're doing with iCore, because you have made some massive pivots. And I think we've had a couple martinis discussing, my business plan changes, your business plan changes. why is iCore focusing more on these rainmaker style events with these more advanced topics?
Well, a couple of different things. One was when I entered into 2024, I had a New Year's resolution of, if you've been to a RIA, traditionally you have a lot of beginner investors that maybe aren't necessarily doing. And my goal was to focus on creating more doers. But also, a couple of years ago, I was participating with the Urban Land Institute at an event, and they were just talking about the way that investments were going. And I think the tangible investor is losing more and more opportunity, but there is more opportunity, similar to what you're talking about with the commercial market, of people bringing together funds, partnering, joint venturing, and ultimately doing syndication deals. And back to, in the real world, you don't always have a place at the table if you're a more advanced or seasoned investor.
Yep.
And so I was like, we need to climb higher and serve this underserved market and start bringing people together so that they can partner in joint venture. They're not the lone cowboy, cowgirl out there. And so it feels really, really good to be going to this place and bringing actual doers to the table.
Yeah. I love it. I love the direction because, I started my investing career and, I was attending iCore events, I became friends and I was a member there. And of course, my business grew. And then as my business grew and the market shifted, I love that iCore shifting. I'm like, cool. That's where I want to be. I need more of that. So we'll go to more details on there, but scan the QR code. It's an all-day event that's really with the intent of being around the advanced stuff and much more like the networking and the workshopping, the doing of it. We will drop in a coupon code into the chat here in a minute. I think if Jules will do it here in a minute, or you can always text me or Troy later will give it to you. But we got a coupon code there to knock off some of the price. All right. So back to some of the details on the syndication. I've already basically got this question in the chat box on here of saying, hey, Chris, I don't have a podcast like you do. I don't work with bigger pockets like you do. So how can I do this? Well, understand that you don't have to have a podcast. You don't have to work with bigger pockets to do this, nor do you have to do these big deals like this. I'm going to kind of swing the pendulum back to the other end of the market. I want to highlight a success story here for my clients and friends, a guy named Miller McSwain. So he's right now 23, 24, maybe 25 right now. I think about 2 or 3 years ago, he moved out here to Colorado Springs. He was going to college on the East Coast. And he wanted to start real estate investing. Now, he's an engineer, but he wanted to get into real estate investing. So he came out here and he bought a house hack in Colorado Springs. So a house hack was to go buy a place, live in it for a year, then go move out. He did that, loved it. We helped him buy a second house hack in Colorado Springs. And he was like, hey, I love this, but it's too slow. And of course, Miller was doing what we preach. He was learning. He was attending events. He was out there networking and saying, hey, I want to go out there and I want to scale my business faster. And so with his house hacking, he really focused on co-living, which is a different word for rent by the room rental. So, hey, go buy a 4-bedroom house, add another bedroom or two, and then go rent those out individually to tenants, for $700, $800 per room. Might be a little different in Colorado Springs, but that's the gist of it. And he had a lot of success with that on the house hacking. And as the real estate market has shifted, that is one of the few strategies right now that works in terms of a rental in all up and down the front range. You can't go out there and buy a long-term rental, put it down 25% down payment, and turn the keys over to a property manager. You can, but you'll be like negative $500 a month in cash flow. So room by room or co-living is one of the ways that we are seeing that you can go buy properties and actually make them cash flow in today's high interest rate, high priced market. But here's the thing, that takes a lot of time to go out there and manage a single family home. And for a lot of investors, they don't have the ability to do it. And so what Miller realized was, hey, I've got the model, I've got the process, and he used his engineer brain to go out there and just kind of like make his playbook, make his standard operating procedures, and just get the whole process in place. But he brings the sweat equity. He brings the deals. He brings the ops. So, I'm 42 right now. So this was, me 20 years ago if I was real estate investing, where you have more time and less money. And you don't have don't have a family. You don't have all the other stuff where you have a lot less time now. So he's in that phase where he's got more time, but less money. So what did he do? He went out there and brought a partner on who was kind of the other end of the spectrum, where He has capital, money, but he doesn't have time to run the deals. So actually his partner on at least his first deal, I think his second deal too, was another client of mine in Envision, and they met at a networking event. And they've done, I think, at least 2 deals together now where his partner, kind of like me, in his 40s, family, professional, has cash, has equity from other rental properties he's purchased over the years. But he's like, hey, I want to keep buying rentals out there, but I don't want to put down a 50% down payment. I don't have the time or desire to go out there and do a room by room deal. So Miller brought the sweat equity, and then his other partner brought the capital or the cash. So that is a different form of a partnership. Now it's a lot simpler than all the syndication stuff we talked about, because the syndication involves, dozens and dozens of people. And really for this deal, it involves 2 people. So it's a more of a simple form of a partnership, but it's the same concept. So in 2023, Miller did 2 of these deals with his capital partner. And then 2024, his goal is to raise about $1.2 million to take down 8 co-living properties in Colorado Springs. This is awesome. And no matter where you're at in the phase, like I wanted to pick Miller's story, A, because he's out there hustling and winning in the market. He's adapted, but also it shows, hey, go out there and identify the trend. He's focused on the BFT, the big freaking trend of, hey, what cash flows in the market right now is rent by the room rental properties. And he's become an expert at that. So that's his trend, and he's putting those deals together. So again, these types of deals is what we'll be talking about on the Rainmaker Forum. I've actually talked to Miller. He wants to come to the event. He has some family in town, so he's like 50-50 he can make it. So he might be there, so he can actually meet Miller in person, maybe do a deal. But let's spend a minute here talking about this, because this lawyer right here, he's the second from the right, CJ, he's going to come talk about how to structure partnerships, the pros, the cons, how to do it, the gotchas. He's actually come talk about how to do these deals. Plus, I've learned from other events, myself included, everyone loves free legal advice. I think the cost of the event is less than 1 hour of your regular attorney's fee. I think the event's $300, $400, and a lot of my attorneys are $300 to $500 an hour. So we got one lawyer there who's going to talk about, the contractual stuff, the structural stuff, plus give you the context for, hey, what's worked and kind of some pitfalls to avoid. So the Rainmaker Reform is going to be all about how to do these deals, from structuring smaller partnerships to some of these bigger deals like we talked about on Samuel Drive. All right. So pivoting on to the third part of the presentation on here, which is how I raise money for the Samuel Drive property. And so I have focused raising money from landlords. I say smaller landlords, people like me, people like Troy, people like a lot on the webinar here. We've bought single family homes, duplexes, triplexes. They're not doing the bigger deals, but they rode that Denver growth wave. They rode the Colorado Springs growth wave. And they're like, hey, I love real estate investing. But how I used to invest, those numbers kind of stink now. Where can I invest now? Great. Well, hey, this is where the investment is. Let's go focus on there. So this is a huge trend in the market that I've been able to raise from. And guess what? You can too. Anyone can go out there and do it. I mean, that is what Miller has done. His partner on those first 2 deals were actually, again, a previous client of mine in Envision that bought rentals and said, hey, I want to get in these deals. And then Miller raised money from him to go out there and take these deals down. So understand, this is a great strategy. And talk about another BFT, another big freaking trend. There's a lot of landlords out there with cash in the bank and equity in the real estate piggy bank and say, I want to go invest in more deals. Help me go place it. So going back here, and this is a screenshot from that Samuel Drive property that we're using example here. We needed $2 million to raise for it. So I actually want to talk about an investor in this deal, and he's invested in a lot of these bigger deals as well. So here's Matt Amundsen, and he'll be the event as well to come learn and come network. So Matt's like a lot of people out there where he had another career outside of real estate. He was a musician. As he puts it, he's like, hey, I love music, but music wasn't paying the bills. Making tens of dollars a night doing a gig it was not going to secure what his family want to do. So as he was getting married and starting his family, he said, hey, I'm going to get into real estate investing. And that same trend we talked about of riding that big Denver trend, he started with a fix and flip or two. Then a couple of those fix and flips turned into some rental properties. And he became a real estate millionaire by riding that trend, like so many people out there on the webinar have done as well. A couple of years ago, I actually got to know Matt through a networking event. He was like, hey, I don't know where to invest my deals. Where should I go? Well, he looked at his portfolio, and this is a really advanced screen, or this is a very advanced topic, but it's actually a screenshot from software that we have developed and we use called Property Llama. And this is software that helps people analyze their rental portfolio and helps them figure out how their rental portfolio is working so they can make sure their portfolio is aligned with their goals and making sure their equity is working for them. So I'm going to go jump to this screenshot on here. And this is one of the properties on Willow Drive here in Denver, Colorado, property bought about 10 years ago for $100,000. Now with $400,000, he had about $200,000 in equity in there. And while he's making decent cash flow, his equity is making about a 10% total return for him. And that was looking at over the next year, the appreciation, the debt pay down, the cash flow, the depreciation. He'll make about $20,000 in gross return. Well, $20,000 divided by $200,000 is about 10%. And so he's like, hey, I don't like those numbers because that's basically the stock market return. If I'm going to make the same return as the stock market, I might as well invest in the stock market because why am I dealing with tenants? Why am I dealing with toilets? Why am I dealing with liability? So Matt's dilemma, he said, hey, I see the trend. And he was someone that saw this and, smart guy. And this is obviously why he's become a millionaire, a couple times over in real estate, was he attended a webinar in like July or June of 2022. And then he started selling some rentals and investing some of the equity and some of the cash in these deals. And one of these deals down here, where was it? One of them is actually in the Samuel Drive. Okay, so you look at line item 4 here. Invested $50,000 into the Samuel deal that we talked about. So this is actually, I've got his permission to use this. I do a lot of work with Matt now as well. We do deals together, but he took some of this capital and invested in these apartment buildings. So Matt is the case study for what type of deals or what type of investors you can go out there and get to invest in these deals. All right, I got my screenshots working here again. So my point with this is part of that BFT, part of that big freaking trend. We talked about the appreciation party being over. And so this is that same chart where that yellow line and that yellow area shows equity. That red line is debt. So there's millions, actually trillions of dollars of equity out there. This is not just Denver, but we're talking the whole United States. Trillions of dollars of equity, with some of that being investors, some of that not being investors, but there's trillions of dollars of equity that is sitting on the sidelines where some of them want to go out there and invest in deals. So go out there and find another Matt. There are literally millions of Matts. I think there's 10 million plus investors out there, and maybe close to 20 million in real estate investors in the market. There are literally millions of people like Matt out there. Troy, how many iCore members are like Matt? Gotta be hundreds, I would think, right?
All of them.
All of them? Yeah.
Just about.
I know you have, hundreds and hundreds of members and thousands of people that plug into your events.
Easily 60 to 70% of our membership would sort of fall into this category.
Yeah. So again, another reason why, hey, come to the event to network with these other people, because some will be investing and some might invest in your deal, or you can invest in their deal. So again, coming back to like the Rainmaker forum here that we talked about, and we got the coupon code in the chat, and that'll knock off some money for you. Come to the event because we actually talk about how you can go out there and find other Matts, find other investors out there that want to invest in these deals, or may not want to invest in the deals. They want to invest in good real estate deals, but don't know where they are. Some will be at this event. Plus, we'll actually walk through, if you want to, everyone that comes to the event will get a free Property Llama account. You can use it if you want to go out there and raise money from people you may know from your landlords, or just get the concepts, because you don't have to have the software raise money. It's a great tool. we'll give you some of the knowledge on how to talk to real estate investors out there, these long-term real estate investors. And if you want to, you can use the tool to help model things out like what Matt did here. And then you can see here, Matt's put, I think, close to $1 million in some of these bigger syndications. I don't think it's quite that, but close to $1 million. So, Matt's a good guy to know. And the other Matt's out there is a really great guy to know. Again, going back to the topic. Okay, but Chris, I don't have the podcast. I don't have a piece of software like you. You don't have to have that. Again, these are tools, but you don't have to have it. I want to share another success story, a guy named Luke Reitz, and I met Luke last year, part of my networking and learning from other people in this market. And so this is Luke in the college photo with, 3 of his buddies here. He's this guy in the glasses. And so Luke began his fundraising journey about 20 years ago as a missionary right after college. So he was raising money so he could support himself and support his mission with the church. And it's really focused on relationship building, building trust, and just making sure that people knew where their money was going. And so he had a higher purpose in real estate investing then, but he was raising money again. He had that skill set. But he took that skill, he took that approach and started using it to go out there and raise money for real estate deals. And so I love what Luke said here. I can put in quotes. He embraced the refuse to lose mentality. He had an unstoppable spirit. He networked almost every day, and he plugged into as many in-person events at RIAs, Real Estate Investment Associations, like ICOR. They're all across the country. ICOR is the one here in Colorado, and he would do that multiple times a month. He would come to these. Now, he started his investing actually in Baltimore on the East Coast, so he wasn't at the ICOR years ago, but he was doing all the same stuff in a different market. Now, since then, he has raised about $20 million for these real estate deals, for some of his nonprofit missions, real estate ventures, and just others where he's able to connect with people who had capital, and he could connect capital to deals. Now, he has been actively investing in real estate for about the last 10 years. So he's been doing deals himself, like me, like Troy. He's been raising money to invest in some of these deals as well. And he's been able to build a great business and a great lifestyle for him, his family, and his 6 kids. He lives in Highlands Ranch as well, and he's a lot of experience in real estate investing. But it goes to show that, hey, no matter what your background, and Luke did not have a podcast, Luke did not have bigger pockets, did not have a piece of software. He was belly to belly. He was face to face. He was networking and coming to events like the Rainmaker Forum here. And actually, Luke will be at the event on April 25th. He and I were texting this morning, and he confirmed he will be there. Why? Well, he wants to learn. He wants to network. Same thing that he was doing, about, I guess, almost 20 years ago. He has been still doing it. So again, even though he's already had a lot of success, he's still coming to events like this to learn and to network. And again, if you want to meet Luke to invest in a deal or learn from him or ask him a question, come to the event and come meet Luke there. All right. So as we wrap this up, I really want to kind of go into a mindset shift. Because even if you don't, do anything with us, you don't come to the ICOR event, fine. But I want you to take this away. Where can you bring value? This is like the number one mindset shift I think so many people need to go through, because they're like, oh, I got to do all this myself, or they put themselves in a box. No. Where can you bring value? Like, what are your skill sets? What are your strengths? Where can you bring value to the table? And you want to focus on, hey, where do you bring value? And then find other people out there that complement your value. Now, if you have the exact same value as another person, probably not a good thing, because they need to complement each other. Hey, if we're all good at one thing, it's not diverse. But what makes a good partnership? Obviously, people on the same page, people the same, morals and ethics, but people with different skill sets. I do A, Troy does B, Luke does C. That's a good partnership there. So I want you to get that mindset shift of where do you bring value, and you have to go away from the I have to know everything or I have to do everything. You don't. So here's my question, and I know we got a little bit of time off in the webinar. Where do you guys bring value? What is the best value that you can bring to the table? If you guys want to brainstorm for a few minutes, put them in a chat box there. I would love to dive into it. But have a honest, sincere question with yourself on there, because that's what I did years ago. I definitely had, as I was learning the stuff with Terrence and all these other super successful, deal makers, like in the studio, I had a couple people that had like $1 billion in assets under management, like $1 billion with a B. It's intimidating. You get a little FOMO. You get, oh my gosh, I can't do that. Well, this person's better than me, right? We all have that stuff. So I've been there, I've done that, but I always said, okay, if they did it, I can do it. And where can I bring value to be what they did? I noticed what those people did. They had business partners that helped them run the deals. They had syndications. They had dozens of syndications, but they focused on their skill set and where they brought value, and they partnered with other people that brought value. And it can range from having another investor in your deal, and their value is, hey, they write a $100,000 check, or they write a $200,000 check to invest with Miller in Colorado Springs, or they write a $100,000 check to invest with Luke in a deal. Great. That is, they're bringing their value in through a check. Other times you're bringing the value through bringing other people checks, or bringing value in finding a deal. Where do you bring value? So my question to you, and my really, I would say, marinate on this for a bit, like, where can you bring value? Like, have a heart to heart with yourself, because I did that. And then come out to the Rainmaker Forum. And before then, you can come through and we're going to chat with you. This is not just a show up event and sit there for an hour and be talked at. You're going to be masterminding and networking and talking with other people. Like I said, Luke's going to be there. I think Miller is 50-50 right now. When I talked to him last week, just depends on family obligations. But the whole point of this event is the market has shifted. And as we talked about, solopreneurs are being gatekept from the best deals. It's all about partnerships and OPM, or other people's money, to go out there and get in this market. So I know we got some questions piling in there. I'll answer those in a minute. I want to go through some of the nuts and bolts of the event here, because I am really happy with how the event turned out. I mean, we talked a lot about here. I mean, Troy, this is an all-day event, April 25th at 3034 Larimore Square, or Larimore Street. Register, just don't show up. Of course, we have the opening remarks all here, but let's go through some of the details. The first speaker we have is Byron Elliott. He's a lawyer at Three Pillars Law, and he's going to be talking about how to scale your portfolio while legally and ethically using other people's money, or OPM. He's going to go through like syndication structure, how to understand preferred equity, debt funds, distressed asset funds, and how property taxes and interest rates affect on pro formas. So Byron is actually my lawyer for a lot of these deals. I have, invested or spent, well over $100,000 in legal fees with him, help putting these deals together. He's a friend. He's also an advisor to me. And I say, hey, I'm looking at this deal. Give me your eyes on here. What should I look for? What are some pitfalls? What are some obligations? Because one of the great things about getting access to people like Byron is that, yeah, he's done deals himself. He's also seen hundreds, if not thousands of these deals, the good, the bad, the ugly. And so he has great insight in there. Again, you're going to come here. He's going to give a short presentation. There's going to be a round table to go out there and ask him questions on, hey, what about this situation? Or I'm thinking about doing this. How can I do this? And then so Byron is this guy here on the far right. And the second to right is CJ, our second lawyer on here. And he's going to give a presentation. The market is not the risk. Your unforced errors are. The emerging trends in partnerships and joint ventures. Now, partnerships, they're like marriages. Half end well, half don't end well. And I've found that for myself in some of my partnerships. But CJ is with Hatch Attorneys. He's talking about, hey, where do you fit in here? And Troy, you know CJ very well. Give a little background on him, please, because I don't know CJ. I know Byron, but CJ, you've just sang his praises when we were putting this event together.
CJ has been a champion and advocate for the industry for a very long time. From time to time, we have bad actors in the marketplace, and ICOR is probably one of the only organizations that has an ethics policy. And unfortunately, I had to work with CJ on something that, it was sort of protecting my flock. And he's always got the best interest of not only just ICOR, but the community as a whole. He himself is doing more and more partnerships and joint ventures, I think, with ICOR members. And so not only only is he a subject matter expert, but he's a practitioner as well.
Yeah. So I will be giving a presentation on how to raise your first $1 million, whether you have your own deal or not. Now, this is going to be a much deeper dive into some stuff I talked about today. Again, I'm going to go into more of the details of how I raised it, the details how we structured it, the details of how I found the deal, but also keep it that workshop mentality of, again, not just me talking to you. We did over a webinar. We did over a YouTube video. This is like, hey, here are some main key points. Now let's mastermind together and actually talk about some of these issues. And so it's great for you to come ask your own questions and also learn from other people. So I'll give a presentation on how to raise the money. And then a lot of the afternoon is really focused on facilitated networking, where I know, Troy, this is like one of like your superpowers is you're so good at getting people's like, pain points and opportunities and, hey, what can they do to go out there and do better? So a lot of facilitated networking, like, hey, I have a question, I have a need, I have a want, what can I do? Something else that's going to be really cool there is you're going to be sharing a new platform or newish platform. And I'm drawing a blank on the name. Fractional. And that's a really cool software platform that I know iCore members can use to help raise money. Talk a little about that if you could. Because I've not used it, but you showed me a demo. I was like, ooh, that's hot.
Well, it's the response that we've gotten has been incredible. I think some people have a little bit of intimidation, even though some of these deals, it's just another zero. But this is a great way for two folks. One, if you're looking to raise capital for a deal, you can put your deal up there and ask what you're looking for, and then also solicit other community members to participate in this. The other side is if you maybe don't have the capital or you want to get started and you want a little bit of experience, you can put money into a deal, I think with as little as like $5,000 and up.
Really?
Yeah.
Okay. So I think some of the founders or representatives will be there.
Yeah, actually the CEO of the company, she's 26 years old. And she's probably one of the most successful investors that I know. And it's just crazy how much she's done in just a short amount of time. And she created this platform out of a need that she was looking to raise money.
Oh, that's the best type of tool. She's an investor herself, needs an easier way. So again, there'll be a demo there on how to use it. And from what I've seen, especially for doing, deal, and it's like a great option to look at as far as like being able to raise money and help out with all the back end stuff. And then a lot of networking on here. And again, this is going to be some workshopping, some networking, and there'll be an offsite happy hour at the Block Distilling Company afterwards. And so come to this event, with a plan, and come with the event with the intention to go out there and network. Come ready to be very articulate in what you're working on, what you need, where you want to go, what your roadblocks are. Come with business cards. Come ready to network. And then, come learn. But then, man, I've had some of the best connections happen over a cup of coffee. Or sometimes over a couple beers. So come and plan networking the whole day. All right, we got some questions on here. Ooh, all right. So, is this event once per year, or will there be another opportunity to attend?
We want to see how this is our first time dipping our toe into the waters here, but based upon the response that we have so far, we, without little to no promotion, we're already selling tickets just because people are like, this is what I have needed for a very long time. So there is the discussion of, is this going to be a triannual or quarterly thing? But I think that we have a lot to learn from this particular event to continue to grow upon it and make it even better the next time.
Yeah, I think we'll probably do more of these, and there'll be some iterations as well. We've already had a lot of people say, hey, can we do a deeper dive mastermind? Can we do more facilitated raising? I want to go out there and find a mentor. Can I help invest in one of your deals? So like, I think this will be like kind of the tip of the iceberg. I'm excited to do it. So if you can't make it, try your best. If you can't, definitely let us know. We'll put you on the list for future events if we have them, but I'm pretty sure we will. I want more of these events because they're good networking. Like, this is how I do deals with people.
What I love is what we've sort of give the subtitle of it is a networking experience for forward-thinking investors. This isn't just coming and sitting and listening to a presentation. We're talking about best practices. What are the hot button issues in the marketplace, but ultimately bringing people together to do business with each other.
So the other thing I forgot to mention on here, we're keeping this to about 50 attendees. Why? Well, because if it gets too big, it's really hard to have effective workshopping and effective networking. So rather than just cramming 500 people in there, Troy's keeping it to about 50 people, which is kind of the sweet spot to be able to run an event like this where you can learn a lot and network. So there is truly limited seating, because that's also I know we talked a lot about room structure. That's what the room fits. That's how the event's set for. So there is a true hard cap on there. And the general price is $397. The early bird tickets are $297. And the coupon code on there, thanks Chris, will knock off some more money as well. I also know, I think we have 10 slots for that, and that'll probably fill up before the webinar is over. And there's also, if you're an iCore member, I think there's some special pricing on there. So make sure you talk to me, or make sure you talk to Troy so you can get registered, and we'll give you the best price that we can out there. And Troy, thanks a lot for giving our viewers a couple bucks off. It's always nice. And again, so this is it. So let's say you pay $300. Let's just say you pay $400 for the event. That's like what an hourly rate for a lawyer is.
Mine's $450.
$450. I'd say the first lawyer I talked to, where I did some work on, his hourly rate was $550. And that was for capital raising. So again, you're going to have two lawyers there. So giving away their time and their information. So lots of great resources on there, and literally you'll at least get an hour of legal consultation out of there. So again, there's the QR code to scan. I think we can drop the link in the chat box as well, or we'll send the link in the follow-up as well, or they can just go to the iCore website, right, Troy?
Yes.
Where do they go to the iCore website? iCore calendars?
Events, icorockies.com/events.
All right, icorockies/events. All right, a couple other questions here. Mark asked earlier, how is this syndication different from investing in Verco? So Verco is Terrence's company. It's not. So Terrence basically does syndications where he does these deals. And he's the one that's, being the sponsor, doing the deals together. And he says, like that same will drive, where he's the operator on, or a building in Des Moines, you invest in that is a syndication. Now, his company is the one that's actually running it. And he's got I think about 50-ish employees on there. Yeah, 50. So when we talked about this not being a solo entrepreneur, he's got about 50 employees ranging from construction, from property management, to finance, to accounting, to reporting. It's a big operation. Oh, I love it. Pam says, I'm in. Who do I pay? I love it. Go to that website right there, Pam, and then put your credit card in there. It's pretty simple. You go there, icorockies/events, create your account, fill in your name, your phone number, and then your credit card details as well. Susan says, what are the asset management fees for a commercial deal? And what does that buy, and who does the money go to? All right, so we'll go into a lot more of those details at this event here. But I can be a quick deal. And here's a really great thing. If you don't want to put together these syndication deals yourself, but you want to invest in them, knowing is half the battle, I think is what G.I. Joe taught me when I was a kid. Yes. So this is a great thing to actually learn how it's where your money is going. So a very common structure on here is usually like a 1% acquisition fee and a 2% annual asset management fee. And that's really going to just pay the overhead and pay for, finding the deal, running the deal, doing the reporting, doing the accounting, doing all the stuff as well. So that's a very common structure that a lot of my deals follow. And I'd say, 80% or more of the deals go out there as well. Now, of course, every deal is a little different, and you always want to read the fine print. And a lot of times, the more you invest, sometimes you get slightly better, fees on there as well. All right. Any top resources you recommend to learn more about syndications? Oh, yes. Got lots of them. One is obviously I'd come to the event on here. I think this would be a great event. Even if you're brand new, it'll be drinking like a fire hose. Two things I would recommend off the top of my head there is a book, the best ever, I'm drawing a blank on him. Joe Fairless is the author, the best ever syndication. Jules, do you remember the name of his book? We'll find and publish the link in the Amazon book there. But all right, this guy right here. He has over $1 billion asset under management with Ashcroft. His name is Joe Fairless. He is one of like the godfathers, I'd say, of like syndications. Ray's been doing it for a long time. He's got an amazing book out there. I think it's like $40 or $50. It's a little textbook pricey, but it is worth it. Yeah, best ever apartment syndication book. And actually, yeah, Jeff put that in there, and I think I recommended that Jeff about 2 months ago. Jeff, type in if that book is worth $50 in a couple hours of your time, please. I'll share it with the audience. And something else too, I will share the playlist because we have, I think, about 30 or so episodes from this multifamily mentor show that I do with Bigger Pockets and Terrence Doyle. And so a really cool that learning from those people was so transformative in my days of learning this. And because Terrence was really scaling up and learning. And then we also really flexed the Bigger Pockets name to get big names like Joe Fairless out there to come to the event. I would read the book. I would go through those playlists. I would come to this event as well. And those would be 3 things I start. And of course, YouTube University is your friend. Great area to learn, but specifics would be that Joe Fairless book, our playlist here, and of course, this event if you're in Denver and if you can make it that day. All right, so Jeff, who was a guy that thankfully reminded me the name of the book, he said, definitely, which is all caps and quite a few exclamation points. He listened to it on Audible, but also bought the book itself after. So there you go. Audio version and book. Those would be my 3 recommendations for what to do now. Someone said, how many seats are left? We don't have that in real time. We know before the webinar, I think it was supposed to about 1/3 of it was sold out. It should stay on the website. And I think it updates in real time with the platform we have, Troy. So I don't think it's going to sell out this minute, but I think it's going to sell out here pretty soon because we have the webinar now. We had about 100 people registered for the webinar, and now we're also going to start doing the big promotion for it.
Yeah, it's obvious that we've struck a chord with someone. And when we first started talking about this, I reached out to Byron, and Byron's like, wow, he's like, I was actually thinking about wanting to do something like this. I'm just glad that you're doing it, so I don't have to.
Yeah.
So
Byron is the lawyer that I use, and one of the lawyers here speaking at the event. So yeah. So cool. I think we got all the questions answered on here. So I love that everyone came out, and we definitely struck a chord because it looks like pretty much everyone that came in the beginning is still here, even though we're an hour and 20 minutes in the webinar. So thank you everyone for coming out. If you guys have questions after this webinar on partnerships or syndications, hey, please reach out. Troy and I will do the best to give you resources, recommendations that we can. But also make sure you come to the Rainmaker Forum event if you're in town that day. And you have to take a day off of work or rearrange some things. I promise you it's worth it. I am not a huge events guy. I'm very big on quality over quantity. And this is a high quality event because I know the people there. I know Troy, who's the host there of the event. I know the vision with it. It's worth a day and the $300 or $400. It's an absolute steal. This is equivalent to an event that will have another 0 behind it. So come to the event. And Troy, thank you so much for corralling everyone, for putting on the event, because I know, you make the events look easy, which means you do a lot of work behind the scenes to make it, seamless. And I know the vision. I know what you want to do with, as you call it, the iCore flock. I love it. I'm on board. I'll be there. I'm inviting a ton of my investors and clients and my team members there as well. So hopefully I'll see you at the event, everyone. And Troy, thank you so much again.
Absolutely. Thank you.
Bye, everyone.